A very good morning and welcome back to your live virtual classes. Paper 1 accounting, and here we are doing the chapter number 11, and under that we have come into the unit number 5, which is the redemption of privileges. So what did we do in the last class? So to have a very fast recap of what we have done in the last classes, we have dealt about the equity shares. Two major parts is related to the equity shares. So it was about bonus issue and rights issue. So the bonus issue and rights issue is related to the equity shares, wherein in the case of a bonus share, it is like an advantage. You are giving benefit to whom? The existing shareholders. In the case of bonus shares, the shareholders are not required to pay even 1 rupee. You are giving to them at zero cost. So who will bear the cost? The company should bear the cost. From where? So the company, out of its reserves, which is available in the balance sheet, it is going to take the amount from the reserves and give it as shares to the shareholders. So then we have seen the concept on the conditions that is required for the company to satisfy before it goes for the bonus issue. The articles of association of the company should authorize to issue the bonus shares. Second point was the authorized share capital is the maximum limit of shares or the amount you can raise. But sometimes when the bonus issue is being made, sometimes the issue plus the bonus will increase or it can exceed the authorized share capital. In such cases, the board of directors should in the general meeting pass a resolution. They should advise that in the general meeting, the shareholders pass a resolution to increase the authorized capital. And this copy should be filed with the ROC. So what is ROC? Register of Companies. So once if they are filing like this, with all the resolutions passed and the bonus shares being made, it will be treated as valid. But before you could issue bonus shares, that particular category of equity shares should be fully called up. The meaning is, if 10 rupees face value, all the 10 rupees should have been called up. If you have only called up 8 rupees, then you cannot go for a bonus issue directly. In that case, first you should pass the issue or you should pass that particular final call entry and then you have to prepare the bonus issue. Only fully paid bonus shares can be used. And the company should be very, very careful. It should have not defaulted in the payment of statutory dues. So it has to pay GST, TDS, ESI, PF, gratuity, everything and anything that is related as per the law. If amounts have to be paid, then first it should pay the amounts and then if anything is remaining, it can go for the bonus issue. If there is any particular loans taken like the debentures or bank loans, the interest and principal should have been paid. It doesn't mean that as on the date of issue of bonus shares, you should repay them. No. The loan can still be there in the balance sheet, but you should ensure that at least interest is paid timely. That is the meaning. If all these conditions are satisfied, a company can do the bonus issue of shares. Okay? Now, from which sources or from which are the reserves that I'm going to touch? So, if I'm going to tell you the priority wise, the first will be capital redemption reserve. When I was talking about the capital redemption reserve, I told in your unit number 5, which is redemption of preference shares, I'm going to talk about this capital redemption reserve at length. So, the first reserve we will talk about or you will touch when you want to issue bonus shares is the capital redemption reserve. The second one is the securities premium collected in cash. Okay. And the third one, after the securities premium, you have the general reserve. Even if these amounts are not enough from all these three reserves, then you will go ahead and take the amount from the P&L also. Usually, from these 4 accounts itself, it will be sufficient and you can do the bonus issue. Generally, the bonus issue is always done at the face value. Okay? So, how to find out the number of shares was the major step that we were following. So, the ratio was given to us. So if they give you like this, always the first number is the number of the bonus shares that will be issued. And if this, the second one always talks about the existing shares. Simple. Or if in the question they mentioned, instead of giving you the ratio, they are using the words like 1 share for every 4 shares held, 2 shares for every 3 shares held. That means 2:3. So you will be getting 2 shares for every 3 shares you are holding. So whatever holding is the existing, which will come second and this will come first. So what will you do with this first and second? Always you will take the number of existing shares that is given to you in the question divided by the second number, which will go here as the denominator, and you will multiply the first number. So you will be getting the number of shares to be issued as bonus. This step is quite important. Only after you get this particular step, it becomes easy for you to calculate the amount. Since I told you the amount will always be calculated at the face value, it is quite simple. After you get these number of shares, multiply it with the face value. Multiply it with the face value, and then you can find out the number of the amount that is needed, and then you can go into the balance sheet or the trial balance and check what are the reserves given. Capital redemption reserve, securities premium, general reserve, and P&L account. If in the question they are giving you about revaluation reserve, please don't consider that and given look, because revaluation reserve does not constitute of any real profits. It is just a notional profit. But the bonus shares can be issued only out of anything that is collected in cash or which is available to the company as profit. Is that clear? So this particular points you need to remember. Then we went ahead and we were seeing or looking at the concept of illustration number 1, 2, 3, and 4. The 4 illustrations spoke exclusively about bonus shares, wherein the final call was not made, we made the final call. And then we passed entries for the bonus after doing this working note. What were the entries for bonus shares? Capital redemption reserve account debit, securities premium account debit, the general reserve account debit, and then you had P&L account debit to bonus to equity shareholders. You will use the particular reserves in the quantity or in the proportion or in the preference that I have mentioned. What is the total amount? Take from these and then close that entry. The next entry when you actually issue the bonus shares will be bonus to equity shareholders to share capital. So this process of issue of bonus shares is also called as capitalization of your profits. Already whatever balances are existing in the reserves and surplus is now converted into the share capital. This is how you are going to change it. That simple as this. And then we spoke about the second concept, which was called as the rights issue. So the other day when we were doing it at the end. So I would like to again mention about this particular right shares. So right shares are nothing but they are the benefit given to the existing equity shareholders. Bonus shares are also benefits, right shares are also benefit. What is the difference between these two? In the case of bonus shares, the equity shareholders need not pay 1 rupee also. Okay? But in the case of the rights issue, they will have to pay a nominal value. So the rights issue which is done by the company is a right given to the existing shareholders. So the company needs additional money, so it wants to issue additional shares. When it is issuing, the SEBI is telling to them, don't issue to new people. If you issue to new people, there will be more number of owners into the business. There will be dilution of power. So what you do, you first give it to the existing shareholders, and if they don't want to use it, then you can give it to the new people. Okay. So this is termed as the rights issue. So every shareholder who gets the rights within a period of time should say, I will take up or I will not take up. When he says I will take up, simple, at the rate what the company is issuing, offering, what are the number of shares, multiply, finish the question. But if he is not taking, it is also called as renouncing his right. He wants to give back his right to another person. So when this is happening, we are supposed to do 2 formulas. I was talking the other day with regard to the rights issue. There will be 2 important formulas that you people have to learn. The first important formula is what is the value of a right. This will be cum right price of the rights issue minus the X rights price. What is this cum right price? It is nothing but the market price of the share before the rights issue. That's what I was talking about the other day. It's just a simple formula. If you can remember these 2 formulas, the question will be very direct to you in the exam, like the illustration number 5. Once you remember the formula, taking the items or the numbers from that and putting it to the formula will be a cakewalk. Okay? So the market price before the rights issue minus market price after the rights issue. This will be always available in the question. The current market price of the share will be given to you in the question. That should be considered as the cum right price. That is, before making the rights issue by the company, what is the market price of that company's share in the market is called as the cum right price. Now, madam, how will I find out the X right price? Very simple, you have a small formula. It is nothing but X right price is equal to the cum price into the existing shares plus the rights shares or the shares to be issued in the form of rights into the issue price divided by the existing shares plus right shares. So when you are talking about shares, is it total number of shares, madam? No. In the question, they will give you a ratio. The moment you see a ratio like this, like I was talking about bonus, the same logic will apply even for rights issue also. Suppose if I'm going to tell you this particular ratio, it means that for every 3 shares held, so this is the existing shares. For these existing shares, you will be getting these many right shares. That's all. For the existing shares of 3, you will get 2 rights issued. So you come back to this question, existing shares place you will take 3 and the right shares place you will take 2. And in the denominator, it will be 3 plus 2. Now this price will be given to you in the question, no problem. What about this price, madam? This price also will be mentioned to you in the question that the company wants to make a rights issue at so much of price. The company can make a rights issue at the face value or it can make it at a price above the face value. That is not your problem. Whatever price it is going to make the rights issue, just incorporate it in this formula. So first always you have to work out the formula number 2 and then you should go back to the formula number 1 and then find out what is the value of the right. So this was the concept or this was the illustration number 5 that I was talking to you about in the last class. With that particular note, let us very quickly start off our unit number 5, which is the redemption of preference shares. I had already mentioned about the preference shares in your unit number 2, right? Where we were talking completely about the issue of shares. Under the shares, I told you that there are 2 types of shares. One is the preference shares. The other one is the equity shares. The preference shares is what we are going to talk here. That also we are going to talk about the redemption. Why, madam? What happened to the issue? Issue we have already done as a part of Unit 2. For Unit 2, maximum we have seen equity shares, but the same concepts will apply even for the preference shares also. Just that you have to replace the name with equity shares with the preference share capital. That's not as simple as that. Now then, we come back and talk about the different types of preference shares. It is just a recap. So in one of the types or under the different types of preference shares, one of the types of preference shares was issue of preference shares. It can be redeemable preference shares or irredeemable preference shares. Have you seen that or not? So redeemable preference shares and irredeemable preference shares. What is redeemable? That means which shares are those shares which are repaid after a certain period. Shares that are repaid after a certain period, they are called as redeemable shares. Now here, irredeemable shares are not repaid, but what is the maximum time limit? The maximum time limit is 20 years. Only if the company is into any infrastructure projects, then it can issue irredeemable preference shares for a period more than 20 years. That is right. So now in this particular concept or in this particular topic that we are going to discuss, we are going to see only the concept of the shares that are redeemable. That means what are repaid. So generally, I also told you the other day, any company that goes for issue of preference shares will usually issue redeemable preference shares. Only then people will want to invest in your company because preference shares are much attractive than the equity shares in one way, wherein the dividend is first paid to the preference shareholders and the capital is also first repaid to the preference shareholders. So, why will people not want to go for preference shareholders? And also the third thing is, within a certain period of time, your amount will be repaid back to you. So in that case, every person is like, okay, I will earn some particular dividend on this. And at the end, I will get back my particular amount also. So it will not be stuck into the business for a longer period of time like the equity shares. I am okay, comfortable. So people go for the preference shares. In this particular concept of redemption of preference shares, we are completely going to see how a preference shares will be redeemed. Redeemed means repaid. Okay, like how we were talking about the debentures the other day, that the debentures can be redeemed. Like when we were doing the issue of debentures unit number 3, there we were talking about redeemable after some years. at a par or at premium. Here also the same concept. The preference shares can be redeemed at par or it can be redeemed at premium. When it is redeemed at premium, please understand it will be called as premium on redemption. All of you please see, we are talking about the redemption terms of preference shares. Okay. The preference shares also, like the debentures, can be redeemed at par or they can be redeemed at premium. When I talk about the word redemption at premium, you have to open premium on redemption. What is the account name? Premium on redemption. In this particular unit, we are not going to see any issue entries, but we will talk about the redemption entries. So when the preference shares are redeemed at par, what is the entry I have to pass? My dear students, the entry will be preference share capital to preference shareholders. And you people have to remember, preference share capital, like the debenture capital, will have a percentage before it. Why? Because this percentage is nothing but the form or the amount of dividend that the company has to pay. So always the preference shares will have the percentage. So the first entry will be percentage preference share capital account debit to the preference shareholders. Okay, this will be the first entry. When you want to redeem, this is the entry. You decide to redeem, this will be the entry. When you actually make a payment to them, it will be preference shareholders account debit to bank. That's all. These are the two entries that will be coming as a part of when you want to pass the entries with regard to the redemption. So redemption of preference shares means these two entries, percentage preference share capital to preference shareholders. So whatever capital they have invested into the business, now you want to give them back. So you are transferring it into their account called as or to them, which is the preference shareholders account. Then when you make a payment, it will be preference shareholders account returned to bank. Because you are crediting back, you're making a payment, so bank account reduces. This is okay, madam. Now, when I'm issuing it at a premium, what will be my entry? These two entries remain the same, with only the addition of one account, which is the premium on redemption account. Which side will it come? Is this a profit or loss? It is a loss because the company pays to the preference shareholder. It is a loss for the company. Anything that is a loss for the company should be debited. Okay. Now, please come to this entry. Still, the first one will be percentage preference share capital account debit. Premium on redemption of preference shares debit to the preference shareholders. So one amount capital it will come. If there is any premium that will come here, second amount. And the third thing, which is the preference shareholders, this amount will come here, the total. And then when you are actually making the payment to the preference shareholders, it will be preference shareholders account debit to the bank account. You have to remember a point. Okay. So you people have to remember a point, madam. Okay, preference share capital is gone away from the books because earlier I credited the capital when I took money from them. Now, madam, I have debited the capital when I repaid back the money to them. Over. But madam, you have opened this account, no? Premium on redemption of the preference shares. Now that account is a loss, madam. So what should I do? That will still remain no. But the preference shareholders are already being paid. So what should I do? So the third entry, when you have a premium on redemption in the question, is that out of the distributable profits, out of what? Distributable profits. That means what? The profits that are available to the company for distributing as dividend. That profit, or in simple words, P&L account. Okay. From your P&L account, You should debit the value and you should credit this account. So the meaning is the loss which you have shown it in a separate account in the same year of redemption, the entire loss is taken to the P&L. That's all. So whenever there is a preference redemption or when you are redeeming the preference shares, if there is a premium, the third and the most important entry is profit and loss account to the premium on redemption. Why, madam, I am supposed to pass this? Because they want to make your life easy. Unlike in the case of debentures, the loss on debentures is found. You are writing it off every year to the P&L. No, one shot. At the time of repayment, if there is a premium, just take it to P&L account, entire amount. No ratio, nothing. Simply one entry. That's all. Are you clear? So the entries that you people have to pass on the redemption of a preference share is very, very easy. What is it? The first entry when you decide to redeem percentage preference share capital account debit. Why? Already I have them as liability credit side. It is sitting in my share capital. I want to now close that. When you want to close that, you will debit that account, percentage preference share capital, and you are going to credit which account? I am going to credit the account which is, I want to give it to the preference shareholders. So they are personal accounts to preference shareholders. This is the first entry when you decide to have a redemption. When you actually make or when you actually do the redemption, quite easy, bank will come into the picture. Preference shareholders account debit to bank. So this is when you want to redeem the shares at par. That means 100 rupees I have taken, 100 rupees I want to redeem. But what if I've taken 100 rupees and I want to redeem it at 110? Now what happens is there is one extra account that is coming. You already know about this account. I have taught to you under issue of debentures. When it has to be redeemed, it means the company is giving back the money to the preference shareholders. But is it giving the same 100 rupees? No, it is giving extra. So if I tell 10 rupees extra, that is a loss to the company. So 100 rupees is my preference share capital. 10 rupees is my loss that will come under what is the loss? Name of the loss is premium on redemption of preference shares. And I am redeeming the preference shares. I am giving extra. I am giving a premium to whom? Company is giving to the shareholders, to preference shareholders. Then the entry when you make a payment will be preference shareholders to bank. And only one thing that you have to remember when there is premium on redemption is, unlike the debentures, no ratio that this much or that much, no. Directly take the entire amount of premium on redemption at one go, debit your P&L account because I am closing the preference shareholders account completely. So any loss that is arising out of this redemption should also be closed. How will you close this? By transferring it into the P&L. Since this is a loss, P&L account is getting debited and this is getting credited. So this marks the closure of the preference share capital in the books. Is this clear? So these are the entries that you have to pass. Okay. Now next we are going to talk about, okay madam, you told me how to pass the entries and what is the amount it will be given in the question, everything okay. From where will I get the money to pay the shareholders? So now we are going to go into the concept, okay? So what are the sources for me? Like when I was talking about bonus shares, you told me these are the reserves. This is the way you have to take. Now like that, preference shares redemption also deals with the outflow of money. That means money is going from me to the preference shareholders, madam. From where, which source I have to take? So the next one is the sources for redemption of preference shares. Okay, the first and the foremost, most important is you can repay the preference shares by issuing new equity shares. That means what? When you issue new equity shares for cash, you get the amount into the business. With this amount, you can repay the preference shareholders. Okay. So why do you do it usually like this is when the company does not have enough cash, it can go for this route also. No problem. I promised it to the preference shareholders. After a certain period of time, I am going to repay back the amount. But now it so happened that I don't have money. So what can I do? Don't worry. I can issue the equity shares and get back the money. So now we are going to see exclusively three major illustrations which talks about what are the number of equity shares that you are supposed to issue. What will be that? Very, very, very simple. Whatever is the value or whatever is the particular preference shares for redemption, you will take the preference share capital, total value, divided by the face value of the equity share. All of you please remember, very simple here. This is the standard formula. Okay. Face value only will be coming. Irrespective of, even if you are going to issue the shares, the new equity shares, even if they are issued at premium also, not your worry. Because here the formula says face value, not the issue price. When I do the questions, you will understand this concept. But for now, you people need to understand that even if the new equity shares which are issued to redeem the preference shares, even if those equity shares are issued at a premium, don't take the premium. Simple logic. Why? Securities premium will not be used for redemption of preference shares because section 52 technically told you so many 5 things for which a securities premium account can be used. What are they? First thing is issuing fully paid up bonus shares that we already saw securities premium account was taken. The second thing was for writing of the preliminary expenses. This one preliminary expense? No. The third one was when you are issuing debentures or other securities, if there was any commission to be paid, that the commission expense can be taken from the securities premium. The fourth one is any premium on redemption also can be taken, correct? So here premium on redemption was there. So that premium on redemption alone, if securities premium account is there, you can take. But generally in your textbook, my dear students, the premium on redemption of preference shares is always taken from your P&L account only. So don't confuse so much. The fifth one for which the securities premium can be used was the purchase or buyback of own securities. So this was the purposes for which a securities premium account was used. So I am coming here to tell that even though the new equity shares are issued at a premium, don't consider the premium value. For finding out how many number of equity shares to be issued, just take the preference share capital divided by the face value. Just take the preference share capital and divide it by the face value. Simple. When we do the question, you will understand. Now coming to the second one. The second one says, I already have so much of profit that is pending in the business itself. Like I have high reserves. So I will now capitalize those undistributed profits. So the word used is undistributed profits. So the meaning is the profits that is available with the business for distribution of dividends, for distribution to the particular people as any form of repayment. That profits are there in the business. Then out of that profits, I can redeem. I can redeem. So what are these, madam? This is where you are creating a capital redemption reserve. What is this? Capital redemption reserve. Very simple. Undistributed profits means if the reserves and surplus, what and all will come, madam? You tell me. My dear students, it is very easy. At least in the bonus shares, you had 4 major reserves. What is that? First one, capital redemption reserve, securities premium, general reserve, P&L account. Here, not for only 2. Whatever happens, your general reserve will come because this is the reserve available for distribution and P&L account only. So you will debit these 2 accounts and you will credit or create the capital redemption reserve account. So whenever, if the company has enough profits, without doing a fresh issue or a new issue, using those profits, it can repay the preference shareholders. In what way? These particular reserves will be transferred or a new reserve called as the capital redemption reserve will be created. So the face value of the share capital, which is to be redeemed, will be transferred to the capital redemption reserve. That means the amount that is lying in the general reserve, the amount that is lying in the P&L account will be taken and put into the new reserve. Why they are putting into the new reserve, madam? Can't you just debit them and directly credit the preference shareholders? No. It is required by the Act that you create a capital redemption reserve, which signifies that this is the amount that is available for repayment to the preference shareholders. So don't get confused. Creating this reserve means it is a statutory requirement. Then from where the money is coming? The company will have cash balances. The company can sell some investment or some asset and get the cash. Because ultimately preference shareholders need cash because they gave you cash. You should give them back the cash. So I can take the existing bank balance. If that is not sufficient, I can sell the assets and get the money and then repay back to the preference shareholders. But if in the question it is given that a company decides to transfer or it decides to capitalize its reserves and make a repayment to the preference shareholders, immediately it should strike to you that it is going to create the CRR. We should pass the entry for creation of CRR first, and then only we should pass the redemption entries. What redemption entries? Just now I explained, 2 redemption entries are there. That I am going to pass. So if this is going to be under capitalization of profits, the first entry will be general reserve account debit, P&L account debit to capital redemption reserve. This will be the first entry, followed by the redemption entries. What are redemption entries? Percentage preference share capital account debit to preference shareholders. Then the next entry will be preference shareholders account debit to bank. Then madam, for this you told me these are the entries. What about the issue of equity shares? Very, very simple. Are you capitalizing the profits here? No, you don't have profits much. So what you're doing directly, I will issue the equity shares. What is the entry you will pass when you are issuing the share capital or shares for cash? There is no allotment application. Only one installment full amount you can raise. So it will be just bank account debit to share capital. Only one entry. Simple. Then what will be the redemption entries? The same entries. Percentage preference share capital account debit to preference shareholders. When you actually pay them, preference shareholders account debit to bank. So you are repaying the capital by getting money from the issue of equity shares. This is option 1. Now option number 2, I don't want to again issue a new security because I have so many profits or reserves. General reserve P&L account is huge. I can take money from that and want to repay. In that case, what you should do? You should pass the entry for creation of CRR, capital redemption reserve. From which reserves you will take? General reserve, P&L account you are going to take and create this. After that, you can go for the redemption. Here you should be clear with the concept. Sometimes reserves can be more, but cash can be less. In that case, they will give you in the question that the assets of the company are sold, cash is brought in, and then they are repaid. Even though you have this particular assets being sold, creation of capital redemption reserve is very, very, very important. If under option 2, the shares or the preference shareholders are paid by capitalizing the profits, create CRR. Okay. And then pass the redemption entries. Okay. Now the third option available to the company is the combination of 1 and 2. That's all. That means partly I will issue the new shares. Partly I am going to capitalize the profits. That's all. Partly I am going to issue the new shares and partly I am going to capitalize. When you start doing the questions, it will be very, very easy. So you have to do a working note. Total amount of preference share capital I need. Out of this, so much profits are available. Minus. Then I will get the amount for which I should issue the equity share. So that we will come a little later. Now, what we will do to understand the concept in a much better way, first we will do option 1 illustrations, that is issue of new equity shares directly. Then we will do option number 2, which is exclusively capitalization of profits, which is illustration number 6. And then we will start doing the combination. Trust me, this unit is one of the most easiest and very much you can score from this. Now, if you ask me, madam, in the starting, there is so much of theory. My request to you people would be, first thing is understand what we are doing. So this is the redemption of preference shares. We are supposed to pay back the money to the preference shareholders. What are the options that is available to me, madam? You think like that. These are the 3 options. Once after you understand the question, it becomes easy for you people to understand what is the theory also. Because theory always flows from understanding your basic concepts. Is this clear to everybody? On this particular note, I would like to go ahead with illustration number 1. But please see, my dear students, a preference share can be redeemed only if it is fully called up. Like in the case of bonus shares, we were talking about fully paid up or fully called up bonus shares. The same thing applies here also. Technically, no. When will you repay back? Only if fully is being called and you have their full money with you, then only you can repay back that amount. No? So the same thing I am going to do now. Now let us share the screen and now understand. So all of you please see the question number 1. Hinduja Company Limited had 5,008%. I told you always percentage will come, no? So it is coming here. Okay. 8% redeemable preference shares of rupees 100 each. Fully paid up. Okay. The question says fully paid up. So no need to do anything. Now what is the company decided? The company decided to redeem these preference shares at par by the issue of sufficient number of equity shares of rupees 10 each fully paid up at par. You are required to pass the necessary journal entries including the cash transactions. Simplest problem. All of you please see here. We are doing illustration 1. Hinduja Company already has 5,008% preference share capital. They have issued at 100 rupees each. Correct? Now, what is the total preference share capital? The preference share capital, not holders, preference share capital comes to 5,000 into 100, 5 lakh rupees. Now, I want to redeem this. How I am redeeming? It is given clearly to you in the question by the issue of sufficient number of equity shares at the face value of what? 10 rupees. So the formula I was telling you just now, when you want to issue new equity shares to find out the number of shares to be issued, formula very simple. What is the formula? The face value of preference share capital divided by the face value of the equity share. What is the equity share face value here? 10 rupees. So 50,000 equity shares will be issued. How much? 50,000 equity shares will be issued. Now, my dear students, let us do the journal entries. In the books of Hinduja Limited, very simple. Journal entries. How many journal entries will come? 3 will come. What are they? The first entry is you are issuing the shares for cash. So it will be the share capital or the receipt entry, bank account debit to equity share capital. You should use the word equity share capital because in this question, 2 share capitals are there. So which is what you should write properly. How much? 5 lakhs because 50,000 shares into 10 rupees per share. The narration becomes very important. When a question is very easy for you to pass the journal entries, please be careful to write the narration properly. What is the narration I should write, madam? Being 50,000 equity shares at rupees 10 each issued as per the board resolution. Only after you pass a resolution, you will be able to go for issue of shares. So you should write as per board resolution number so and so dated. So there will be a resolution number and dated. So you will not know what is the resolution number. You will also not know what is the date. This is the presentation that you have to do. In the meaning that the examiner should understand that, okay, when there is an issue of the equity shares for redeeming preference shares, the student knows that there should be a board resolution passed. So this is the narration that should come when you are passing the equity share entry. Now after passing, it means that you have received the money. Now what are the next entries? Redemption entries. How much percentage? 8% preference, right? Full forms. Don't use short forms. If I am using short forms, it is for the want of the place on the board. Debit to the preference share capital. How much is the value? There is no redemption premium. Face value 5,000 into 100, 5 lakhs. Now I have the money. I have got the money from the share capital issue. Here what you should write? Being the preference share capital transferred to the preference shareholders. Okay. Then now final payment entry. Preference shareholders. I'm sorry, here also I've written capital. Preference shareholders account. Preference shareholders account debit to bank. That's all. How much is the value? 5 lakhs. 5 lakhs. How I have got the money? From this value, I have got the money. Being the amount repaid to the preference shareholders. Here you are transferring the amount, then you are repaying the amount 5 lakhs and 5 lakhs. Simple. So this illustration talks about the preference shares redeemed at par, equity shares issued at par. No problem. Take the value. What is the total value? 5,000 preference shares into 100. So it gives me 5 lakh rupees. For this, how many equity shares I am issuing? The value of equity shares, face value should be taken 10. So I am getting 50,000 shares. Okay. For redeeming 5,000 preference shares, I have issued 50,000 equity shares of 10 rupees each. So the entry, first entry I am passing is bank account debit 5 lakh to equity share capital 5 lakh. In the narration, very important. I should write the number of equity shares issued and the face value at which it is being issued, and also mention as per the board resolution number dated so and so. You don't know the number, you don't know the date. So put dash dash but write this narration, and then you are going to redeem these particular preference shares. You have money now, come into the business. Now you can preference shares, you can redeem. Now let us go to the second illustration. Very, very easy. This concept I'm telling you, it is the most easiest thing that you people can see. Okay. Now let us go to the second one. Now please see. C Limited had 10% redeemable preference shares of 100 each, fully paid up. The company decided to redeem these preference shares at par. So the preference shares are redeemed at par by the issue of sufficient number of equity shares at a premium. 10 rupees each at a premium of 2 rupees as fully paid up. You are requested to pass the necessary journal entries. Okay. Now, in the illustration number 2, we are finding the variation. There is an addition to the question. Can we know what is that addition? So, I have C Limited wants to issue, or it has already issued, 10,000. What are the preference shares? 10,000, 10% redeemable preference shares at 100. Okay. So now this 10% preference share capital will be not 5,000, 10,000 into 100. So it will be 10 lakhs. Am I right? Okay. Now here, madam, I should find out the number of equity shares, madam. But the shares are issued at a premium. What should I do? Don't do anything. Still take only the face value, which is 10 rupees. I told you the securities premium amount should not be used for the redemption amount. So, whatever you are issuing equity shares, only the face value will be taken and that only will be utilized for repayment. You cannot consider the securities premium amount received for the redemption. You cannot distribute that for the redemption. You cannot do that. Only if there is a premium on redemption, you can take. But in this question, do I have a premium on redemption? No. Entire 10 lakhs is only the capital. So now I will consider face value of 10. So it will be 1 lakh equity shares at the rate of rupees 10 will be issued to redeem this particular preference share capital. So what will happen here? This particular entry, there will be a small change. When I am issuing the equity shares, I am issuing it at a premium. That is right. Yes. So when I say premium, issue premium is securities premium. When I issue the equity shares, I am collecting the premium. Correct? Now here, how many shares I am issuing? 1 lakh equity shares at the rate of 10 plus at 10 plus 2 each. That means I am writing in the narration that the equity shares are issued at a premium value. Till this okay? Now madam, how to write the amounts here? Very simple. How many shares? 1 lakh shares. Share capital, face value 10 rupees. 1 lakh into 10 is 10 lakhs. And then we have the next one, securities premium is 2 rupees. So 1 lakh into 2 gives me 2 lakhs. Okay. So the total will be 12 lakhs received. Clear? Clear? Here you are not supposed to take 10 plus 2. No, only the face value because premium will not be used for redemption of preference shares. For the capital reduction, it will not be used. If there is any premium on redemption, okay, then securities premium can be used. That's all. Even in that case also, never ever take into the denominator the premium value. When you want to compute the number of equity shares to be issued for redeeming the preference shares, always take only the face value. Don't take the premium. Please make this clear to yourself. Clear? This will be the entry. Now come here. It will be 10% preference share capital. How much is the value, ma? 10 lakhs is the value. How much is the value? 10 lakhs. Now again we come to preference shareholders to bank. In the bank we have enough cash. So we need only 10 lakhs. So I will take 10 lakhs here and 10 lakhs. So this is the entry. Very, very simple entry. In this illustration number 2, we have seen only the change wherein the equity shares are issued at a premium. Even if there is premium, don't worry. For calculating the number of equity shares, just take the face value. The premium will come only into the entry. Otherwise, for computing the number of equity shares, don't consider the premium. As simple as this. As simple as this. Clear, everybody? Now, can we go ahead with the next question? Next question is another variation that also deals with the issue of equity shares for redeeming the preference shares. Now, let us see the illustration number 3. Illustration number 3. All of you please see here, very interesting and very simple. G India Limited had 9,000 10% redeemable preference shares at rupees 10 each fully paid up. Okay, the company now decided to redeem these preference shares at par. The redemption is at par by the issue of sufficient number of equity shares of rupees 9 each fully paid up. That means what? You people can think 9 rupees fully paid up means I should take it as discount. No. Shares cannot be issued at discount. It means that the face value itself is 9 rupees. That's all. Simple. So now we come to the next question, illustration number 3, wherein we are talking about G Limited, and G Limited has issued 9,000 10% preference shares at 10 rupees each. Okay. Now how much is the share capital value we need to give back to the preference shareholders? 9,000 shares we have collected 10 rupees. What is that? 9,000 shares into 10 rupees we have collected. So 90,000 is the value I need to repay. How many? What is the face value of the equity shares you are issuing now? 9 rupees. No discount, nothing. Don't get confused because equity shares will never be issued at a discount. So 10,000 is the number of equity shares you are issuing at the rate of 9. That's all. Now come to this entry, simple entry. There is no securities premium in the question, not there. Securities premium not there in the question. So it will be a general normal entry, bank account debit to equity share capital. What is the narration that you people have to write? So how many number of shares issued? So 10,000 equity shares at the rate of rupees 9 each issued as per board resolution number so and so, dated so and so. Okay, bank to equity share. What is that? It is nothing but 10,000 equity shares into 9 rupees. So it comes to 90,000 shares and 90,000 rupees, not shares. Now come this side. What is this? It is redeemed at par only. Here also 90,000 is 10% preference share capital to preference shareholders. 90,000, 90,000. I have received 90,000 in bank. So now I can just write 90,000 and 90,000 I can repay back. So these are the 3 entries that is coming to you. But the only change is the face value is given at 9. That's all. There is no other change. Every time you saw 10 rupees, 100 rupees premium, here the face value is taken at rupees 9. That's all. Clear? This particular thing? Yeah. Now we are going to go to illustration number 6. Why, madam, after illustration number 3, you are going to illustration number 6? Because now we have seen the option 1. How am I supposed to issue the equity shares? Clear? So equity shares, if it is issued at par, these 3 entries will come. If equity shares is issued at premium, then also for computing the number of shares, don't consider the premium, not required. Take only the face value always. But if there is premium, what is the one change in the entry? There will be securities premium additionally coming only in the first entry. That's all. Clear. In all these 3 illustrations, we have seen the preference share capital redeemed at par. If there is a premium on redemption for the preference shares, what you should do? Simple. Just you are going to put premium on redemption account debit. Okay. And then one more entry will be coming, which is nothing but premium on redemption account will be written off from the P&L. So what will be the entry? P&L account debit to the premium on redemption of preference share capital. But till now we have not seen that. In the further entries, we are going to see that. Very, very easy. Now, let us go to illustration number 6. All of you, please see the board, the book. The following are the extracts from the balance sheet of APC as of 31st December. The share capital is 40,000 equity shares fully paid at 4 lakhs. The redemption is like this. All of you please see the redemption. 1,010% redeemable preference shares of rupees 100 each fully paid 1 lakh. So the value of the redeemable preference shares is 1 lakh that is given to you. Now please read how the reserves and surplus are there. In the reserves and surplus, we have capital reserve 50,000, securities premium 50,000, general reserve 75,000, profit and loss account 35,000. On 1st of January, the board of directors decided to redeem the preference shares at par by utilizing the reserves. You are required to pass the necessary journal entries. So, my dear students, they have decided, the board of directors have decided to redeem the preference shares. How? By the capitalization of their undistributed profits. So this will fall under your option 2 because they have very clearly given to you in the question that no new shares are issued, but The capital, whatever is available, or the capital to be repaid to the preference shareholders will be taken from the undistributed profits. Now, here, my dear students, as I told you earlier, so many reserves list is given to you. Capital reserve, securities premium, general reserve, and P&L account. Out of the four reserves, which are the reserves you have to talk or touch? It is only the undistributed profits are lying in the general reserve and in the P&L. Only these two accounts will be taken. Why, madam? I am not supposed to touch securities premium and not supposed to touch capital reserve. They are not available for distribution as dividends. They are not available to be distributed to the shareholders. That kind of reserve which are not available for distribution should not be considered. Simple. They can be considered for issue of bonus shares, but while redemption, clearly the Act says consider only the distributable profit. So the distributable profit for a company will always be in the general reserve and in the P&L account. Clear? So this is capitalization of undistributed profits, or you can say option number 2. In the option number 2, no new shares are given, but capital redemption reserve is created out of the undistributed profit. Simple. Can we pass the entries now? Here there is no need to calculate at all because there is no new shares have been issued. So directly I am going to pass the capital redemption reserve entry. Okay. But what is the amount? The amount of preference share capital to be redeemed, which is there in the balance sheet, is nothing but 1 lakh rupees. So now, equivalent to the face value of the preference shares, I am going to create a CRR. 1 lakh is the value I need. That is the face value of preference shares, 1 lakh. From which reserves I will take? So here it will be in the books of the 6th illustration talks about in the books of ABC Limited. I have to pass the journal entries. Since it is capitalization of the profits, the first entry will be create a capital redemption reserve, which should be always equal to the face value of the preference share capital. What is the face value of preference share capital? Already given to us as 1000 10% redeemable. 1010% redeemable at the rate of 100. So 1 lakh rupees. Now I need to take this 1 lakh from the reserves. What is there? I told you don't touch the capital reserve and securities premium. They are not available free for distribution. Remove them. Now go to the general reserve. It has 75,000 balance. Correct? So I will take the entire 75,000. Now P&L account has 35,000. But do you need 35,000? No. For 75,000 already is there. The remaining I will take only 25,000 from my P&L. That's all. So come here. What are the entries I need to pass? The first one is creation of capital redemption reserve. I will take the amount from the general reserve and the profit and loss account. So the general reserve comes to 75,000. Profit and loss account comes to 25,000 to capital redemption reserve. How much? 1 lakh. So I am writing being CRR created to the extent. So to which value are you creating? To the extent of face value of preference share capital. Whatever is the face value, I am creating the reserve. So 1 lakh rupees I have created. Next, I have to pass what entries? Redemption entries. Redemption is being done at par. So it is very easy. 10% preference share capital account debit to the preference shareholders. 1 lakh and 1 lakh. So when you are deciding to do the transfer, the amount is transferred to the preference shareholders. Their capital is transferred to their personal accounts. But when are you making the payment? Afterwards. So preference shareholders account debit to bank. I am using short forms. You people don't use the short forms. 1 lakh and 1 lakh. That's all. These are the three entries that will come. So this is option number 2, wherein capitalization of the profits is coming into the picture. In this case, you are supposed to create the CRR. Very, very important. CRR will be created if the question says the company wants to or has the required profits and now it wants to capitalize the undistributed profits, and then you are going to park these entries. Now you can ask me a question, madam. Okay, you are telling pass all these entries. There is the cash, madam. It is assumed that the company has the required cash balances, and that is how it is repaying. The bank is coming here. Sometimes or in the earlier three entries, you showed me bank came and then we paid out of bank. That is there. In this case, it is assumed that the bank is already having sufficient balance. So 1 lakh rupees is already existing. From that, they have paid. Okay. But when they say redemption out of the particular profits, then this will come into the picture. Redemption out of the particular profits means you have to create the CRR. As simple as this. That's all. There is nothing more. There is nothing less. So this is one question wherein fully they have created or they have told you create the CRR, or the other way of telling indirectly create CRR is capitalization of your undistributed profits. Okay. Now we will go to the option number 3. In this option number 3 only, you might have a very slight confusion as to what are the number of shares I have to issue. So they are telling you the concept here will be taught is when I'm coming to the third option, the minimum number of shares. That means what? Very, very simple. Nothing. You don't have to always get yourself confused. A very easy concept. The minimum number of shares to be issued will be computed like this. Minimum number of shares will be computed like this. First, you should take the face value of the preference share capital. Correct? So you will, let us say, some amount is coming. Now from this, if they say the profits are there already, I will take the undistributed profits, whatever is given to me in the question. I will subtract that. Okay, what I will do, subtract that. So for the remaining value alone, I don't have profits. So now what I am doing? Issue the equity shares. That's all. I can do it like this also, or I can do it like this also. First, what I can do, I will say preference share capital is so much. Okay. In this, I will issue so much. First, I will issue the shares. So this much amount I am issuing. What will be the remaining? So this value you should check whether there are undistributed profits in the question. So either way you can get a question. That is nothing but first preference share capital will be there. In the question they can say first use the profits that is there in the balance sheet. In that case, your first formula will come. You will take the preference share capital face value. Whatever profits are there in the business, first undistributed, that means general reserve account, P&L account, you will take, subtract it. Remaining whatever amount will be there, no. For that, you will find out the number of shares to be issued by dividing by the face value. So you will get number of shares. So this is one way you can do. Second way is, first itself the company will say to you, I am going to issue so much of equity shares. Okay. Now the remaining, if there is anything else left out, take it from your undistributed profits. So I can tell you, first any information shall be given to you. It is based on what information is given to me in the question first. Now on this concept, let us see illustration number 4. Illustration number 4 is based on this concept. First undistributed profits will be given to you in the question. Then you will find the equity shares to be issued. Then we will look at one more illustration which will first say so many equity shares are issued, remaining take it from my undistributed profits. So both the methods we are going to see. Simple they are. Now let us go to illustration number 4. I am sharing the screen. Let us look at illustration number 4. Very simple illustration. Just the names, the theory part is given. But otherwise, one of the most important and easiest question is from this particular concept. Okay. Illustration number 4. All of you please see. The board of directors of a company decided to issue minimum number of equity shares of rupees 9 each to redeem the 5 lakh preference shares. The maximum amount of divisible profits available for redemption is 3 lakh. Now calculate the number of shares to be issued by the company to ensure that the provisions of section 55 are not violated. Also determine the number of shares if the company decides to issue shares in multiples of 50 only. So there is so much of information that's given to you at one particular thing, but it is very, very simple. What are the 3 informations I'm going to take from this is the equity shares, the face value is 9 rupees. Okay. Redeem 5 lakh preference shares. So the value of preference share capital to be redeemed is 5 lakhs. Okay. Now what is the divisible profits available? 3 lakhs given to me. So I am supposed to find out how many number of equity shares I should issue. For that, I will come back to this formula. What is this formula? I told you, no? You first have the preference share capital given to you in the question. The preference share capital given to you in the question is 5 lakh rupees. Here, what are the maximum profits that is already available to you? That is nothing but 3 lakh rupees. So I am subtracting it. Now for the worth of 2 lakhs, I should issue the shares. What is the face value? The face value is rupees 9. When you divide 2 lakh rupees by 9, you will get a decimal 22,222.233 something. Now they are telling in the last decimals you cannot issue shares. Okay, it should be rounded off. So they are asking you to round it off to the nearest 50. Okay, so round it off to the nearest 50. I think 233 will come. So 22,200 and next 50 closer is this 50. So 22,233.33 I am converting it into 22,250 shares. Why? Because they have given to me in the question. Okay, 22,000. This is 222.22. So the next nearest thing will be 250. So I am converting them into 22,250 shares. So in this question, they are not asking you to pass any journal entries, but they are asking you to just say how many shares I need to issue when I already have this undistributable profits are there. So out of 5 lakhs, 3 lakhs will go in the form of CRR. So what is that I am going to create? General reserve account debit 3 lakhs to capital redemption reserve account 3 lakhs. First entry. Second entry will be there for the issue of shares. So when you are issuing shares, what will be the entry? I will do the entries. Please, all of you see here. General reserve account debit to the CRR for the first entry. 3 lakhs and 3 lakhs over. Now come to the second entry for the issue of shares. It will be bank account debit to the equity share capital. What is the value? 22,250 into 9. So if you come to 22,250 into 9 comes to, just a minute. 22,250 into 9 comes to 2 lakh and 250. So this 250 rupees is extra. That is okay. So you have issued the shares. Now when you want to redeem the shares, it is nothing but percentage preference share capital account debit to preference shareholders. How much is the total value? 5 lakh rupees. Correct? 5 lakh and 5 lakh. And now preference shareholders account debit to bank will come at 5 lakhs and 5 lakhs. Very, very easy. These are the 4 entries that will be coming when you are doing an option 3, that is combination of issue of equity shares and undistributed profit capitalization. So still now we have seen option 1 separately. So that was 1 entry plus 2 redemption entries, 3 entries. And then when we came to option number 2, we saw capital redemption reserve creation 1 entry. plus premium redemption of preference shares, there were 2 entries. So 3 entries individually we saw. Now the combination will be those 2 entries will come here. These 2 entries normally will come 4 entries in total you have to pass. So illustration number 4, they have not asked you to pass the entries, but I have shown you for your understanding, out of 5 lakhs that is being repaid, 3 lakhs is already there in the form of undistributed profit. What you should do? Create a capital redemption reserve. Now you can ask me, madam, after creating the capital redemption reserve, what happens to this? After the preference shareholders are given away gone, this capital redemption reserve will be there under your reserves in surplus. If the company decides to issue bonus shares, the first thing will be touched is the capital redemption reserve. So this is going to remain as a reserve in your balance sheet. So I am passing this entry for 3 lakhs. Now for the remaining value 2 lakhs, the face value of the equity share issued is 9 rupees. So I am getting 22,222.22. Madam, shares cannot be issued in any decimals. So what I will be giving or doing is, in your question they have told the company wishes to issue the shares in multiples of 50 rupees only. So I am going ahead and I am taking it, rounding off this 22 to the next 50, which is 22,250. For this, I have passed the share value here, the entry. Bank account to equity share capital, it is issued at par. No premium in the question. So it will be 22,250 into 9, 2 lakh and 250, 2 lakh and 250. Now I pass the redemption entries. Percentage preference share capital account to preference shareholders. Nothing but 5 lakh rupees, 5 lakh and 5 lakh. Preference shareholders account debit to the bank, 5 lakh and 5 lakh. As simple as this. Now, can we go into a little bit complicated question? It is not actually complicated, easy only, but you need to apply your mind properly. Come, let us go into the illustration number 7. Everybody, let us go ahead into the illustration number 7, which is the actual combination of illustration 5. I will do a little later. Let me do illustration 7, illustration number 8. And then go back to the illustration number 5. Illustration 7 is one of the easiest illustration. Okay. Now all of you please see here. C Limited had 3,000 12% redeemable preference shares of rupees 100 each fully paid up. Okay. The company had to redeem these shares at a premium of 10%. So the first thing that is coming to you in this question is there is premium on redemption. While redeeming the preference shares, you are redeeming it at a premium. So there is a premium on redemption. Okay, understood. Now go to the next part. For the purpose, it was decided by the company to issue the following. The first thing is issue 25,000 equity shares at rupees 10 each at par, 1,014% debentures of rupees 100 each. Now, what is the question given to you? The issue was fully subscribed and all amounts were received in full. The payment was duly made. The company had sufficient profits. So, my dear students, the question given to you is, you know the preference share capital is redeemed at a premium. You also know that out of this particular preference shares issue, there are 2 other things the company has given to you. One is the issue of equity shares, 2 issue of debentures. My dear students, as per the Act, the issue of debentures should not be used for repayment of the preference shares. No. Why? Because debentures is a loan taken from the people. You cannot take a loan, you cannot take one loan and repay another loan. No, you cannot do that. But madam, why then I can issue equity shares? Because equity shareholders become the owners of the company. You are giving them a higher benefit of making them your owners and giving them voting rights. But in the case of debentures, no such things are done. Directly what you are doing, you are taking loan. So here when the question is given to you, the company decided to issue equity share so and so, debentures so and so, it should issue or strike to you, okay, debentures will not be used for the repayment. So simply the debenture entry will come. When I'm issuing debenture, I will just make the debenture entry, that's all. But now I need to find out here there is preference share capital, there is equity share that is being issued. Now we need to find out if there is any difference. If there is difference, they have also used the word. Please see here. If there is a difference, they have also used the word as, come down. They have also used the word as the company had sufficient profits. That means apart from these two, if it is not having, you are not having the amount necessary, then you can capitalize the undistributed profits also. That is the meaning. So how to find that out? Let us go to the working note. My dear students, now when you go for the working note, okay, when you go for the working note to find out what is the amount of undistributed profit, or in other words, I can write how much CRR to be created, okay? Then you have to find out how much CRR to be created. Why, madam, you are finding out CRR to be created? Because I know the preference share capital ready. I know the equity share capital also ready. The difference between these two will be the CRR. So it is nothing but the face value of the preference share capital minus face value of equity share capital. Even if you are having the premiums in the question, don't consider it. So here, even if there is a redemption premium, not my problem, because for CRR or creation of capital redemption reserve, only the face values will be taken. What it is? Only the face values will be taken. So in this particular note, what is the face value of the preference share capital? Everybody, what is the face value of the preference share capital? Just come up. Here you have 3,000 preference shares, 12% into 100. Okay. This premium don't consider for the calculation of CRR, not required. Now, how much is the face value of equity shares? 25,000 into 10. So, very, very simple. It is nothing but 3,000 into 100 minus 25,000 into 10. So, 3 lakh minus 2,50,000. How much? 50,000 is the CRR to be created. What is this? 50,000 is the CRR to be created. Now we are doing illustration number 7 in the books of C Limited, the journal entries. Okay. The first journal entry will be for the issue of shares. Equity shares I am going to issue. So I am going to pass the journal entry. Very simple journal entry. It is bank account debit to equity share capital. What it is? Bank account debit to equity share capital. How much is the value? 25,000 shares into 10. 2,50,000. What is the narration I am supposed to write? Being 25,000 shares at the rate of 10 rupees each, issued as per board resolution number dated so and so. That is the thing I have to do. Simple. Dated so and so. Now the next one, if you look into your question, what will be the next entry? There is also something that is given to you in the question which says there is debentures in the question, correct? 1,014% debentures each. So the next entry should come in order. Okay. So when I receive money from the issue of debentures, it will be bank account to 14% debentures. So there we have 1,000 debentures into 100 rupees, 1 lakh rupees. This is given just to confuse you. But please remember, this will not be taken into this computation because you cannot take a loan. This is amount received on debentures. Okay. The next entry will be creation of capital redemption reserve. Okay. How will you create the capital redemption reserve? I will be creating it out of my undistributable profits. Madam, if nothing is given to me in the question whether general reserve is there or P&L is there, don't worry. They have given you the word sufficient profits are there. So you can create the CRR in or from the profit and loss account. So the third entry is capital redemption reserve will be created from the CRR. Why, madam, you are taking P&L account? Because we have no information. In the absence of information, we have a clue given to us that sufficient profits are there in the company. In that case, take P&L account. So CRR made 50,000 and 50,000. This is the third entry. Now you have passed all the entries. You have passed equity share capital entry. Debenture, okay, that is given as a separate thing. That also you passed. Now you have passed CRR also. Now come to the redemption entry. Very, very important. All of you see what percentage debenture preference shares. They are 12% preference share capital account debit to preference shareholders. But my dear students, they are redeemed at a 10% premium. So where will this come? Calculation not coming, madam. But don't forget to take them into the entry. So premium on redemption is a loss for you people, for the company. So I am showing it here. So the actual value is 3 lakhs, which will come here. 10% of 3 lakhs is 30,000. Okay, so 3 lakh and 30,000 is the total value I have to redeem. How much is the total value I have to redeem? 3 lakhs is the face value, 10% is the premium, 3 lakh and 30,000 I have to redeem. And when I am making the payment to them, it will be the preference shareholders account debit to the bank account. How much value? Including the premium I am paying. Because I have accepted that I will give the premium to them, so I am paying. So the preference shareholders are paid. Clear? Now the last entry will be after you pass this what? Whenever there is a redemption, premium on redemption given to you in the question, I told you clearly, please close the accounts. That means you should transfer this to the P&L account. Profit and loss account debit to the premium on redemption of preference shares. That will come to 30,000 and 30,000. Since the word sufficient profits are given to you in the question, I am taking profit and loss account each time. Simple. In this question, we had a little extension, that's all. What was given to us in the question, if you are able to understand, if you are able to go through the question, first they said 3,012% preference share capital at the face value of 100 should be redeemed. It is redeemed at a premium. For the purpose, they issued the equity shares. And not for the purpose of this, debentures also they issued. You should understand that it is not for the purpose of redeeming preference shares. Even though the debentures are issued, that amount should be kept separately. It should not be connected to the preference shares redemption, because that is a loan. I cannot take one loan, repay the other loan. That the act will not accept. Is that clear? So then what I did, I understood that for the preference share capital redemption, I have issued new equity shares. Now I need to find out what is the remaining shortfall which I have to take from the undistributed profit. Simple. So I go into this particular calculation or this particular working note which says the capital redemption reserve CRR. I am using short forms. Please use the long forms of the normal writing spellings in your exam. Capital redemption reserve is nothing but what is the face value of the preference share capital, what is the face value of the equity share capital. It will not be bothered about the premium. Okay. So in the computation, Very, very easy. You will be taking the face value of preference share capital minus face value of equity capital. So it is 3 lakh minus 2 lakh 50,000 will come here. Okay. Now that we are going to pass. If you look at the entries, first is the share capital receipt entry. And then we have the debenture entry, and then we have the capital redemption reserve. In this question, nothing is clearly given as to how much capital I need for redemption. That is not given to me clearly, or whatever, not how much capital, how much profits or which reserves are there, I don't know. When in the absence of such information, I will take it as profit and loss account debit to the capital redemption reserve. Okay. And then I will pass the redemption entries like this. And you should remember the premium on redemption will come into the entry, and then from P&L account you should take back into the entry. Okay. Since this is a very, very easy concept, let me take the doubt. Gauri, I think you raised your hand. I'm just unmuting you. Please tell me your doubt. And then we can go ahead to do the next point. Gauri, yeah.
You only told na ma'am, debentures are normally not used to repayment. Then
Correct.
why they are?
No, that is given. I just passed the entry. Passing an entry is different. If I am using this to show in my working note and reduce the amount of CRR, then only it is a mistake. Okay. They have given to you, and nowhere they have mentioned for the purpose of redemption only I am issuing, they didn't tell. They are just using the words the company made a issue. Equity shares also they issued, debentures also they issued. It is our assumption that the equity shares will be used for the redemption of preference shares as per the act. But debentures are not used. So it is our assumption we are doing the question. But the actual thing is debentures should not be used. Okay. If it comes like this in your exam, please write a note stating that as per the act, the debentures are not used for redemption. Only the equity shares are issued for the purpose of redemption. That's all. Nowhere in the question they have told you take this, take this. No. It means that you have just passed the entry. That's all. Clear?
Okay, ma'am. Thank you, ma'am.
Okay, Gauri. Thank you. Now, Kavita. Yes, Kavita.
Hello, ma'am.
Hello, tell me.
Ma'am, as you said that debenture cannot be issued or used for redemption of
Preference
preference
shares. Correct.
because both are loans
Correct.
treated. But when collateral given, at previous you told us
Correct.
that there is also a loan, no?
Correct. Correct. Very good question, Kavita. So coming back to that concept, I am giving this as a security. Immediately, are you taking a loan to repay a loan? No. Only at the time of default, I can give it to them. Okay. Now, coming to this question, the preference share capital has to be repaid now. You are not defaulting in the repayment of preference share capital. You are seeing what are the sources I have to repay my preference shares. In that one source, already you know equity shares are there. The other source, you know that you also have sufficient profits. If they are telling sufficient profits are not there, then also debentures cannot be issued, because to protect the interest of the debenture holders, they will not issue this. Now, coming back to that concept of why or how the debentures can be issued as collateral, that portion also what will happen is you are not taking money from anybody. Okay. Those debentures are just set aside for the purpose of directly giving them to the bank, which means that you are not taking money from the debenture holders and giving it to them. That portion of the debentures belong to the company. They are not giving that to the public, collecting their money and then giving to the bank. No, the debentures are a part of the company. Okay. When you don't pay, the company takes the liability. Okay, I did not pay. You become my debenture holder. But will the bank give you any money for that? No. Already it has given me the loan. That is my consideration. Okay. So there it is a different concept. Here completely different concept. Anywhere, the only logic universal concept is I cannot take money from one person only for the purpose of repayment to the other person. I cannot do that. Anywhere you take. Even you go for a bank, you take a working capital loan and then you're using it for the business. They will give it to you on the thing that you're used for the business only. You cannot take a loan from the bank and take the loan and repay another bank loan. You can't do that. You should not do that. Okay?
Okay.
Okay, Kavita. Now let us go ahead with the next concept. Okay? Now we are going ahead after the illustration number 7. We will be looking at the illustration number 8. So illustration number 8 also says the same thing only. But there what it happens, it first says so much profits are available to us already in the balance sheet. First utilize the profits. If any amount is required over and above that, then issue shares. Here also we are talking about a combination of going for shares and undistributed profit. But which will come first? If you read the question, you will understand. So now let us read the question, Gauri. I will finish the question and take your doubt, okay? So let us go ahead and see this particular question. Come to the illustration number 8. The capital structure of a company consists of 20,000 equity shares of rupees 10 each fully paid up and 1,008% redeemable shares of rupees 100 each fully paid up. Okay. So this is the share capital. Now we come to the undistributed reserves and surplus stood as the following. Please see very carefully. General reserve 80,000. Will you use this amount? Yes, I will use this amount because it is nothing but the undistributed profits lying. Okay. Now come to P&L account, which is 20,000. Will you use this amount? Yes, I will use this because it is lying as undistributed profits. Now come here. Investment allowance reserve is 10,000. Please read the question. Investment allowance reserve, out of which 5,000 not free for distribution as dividend. So the investment allowance reserve is 10,000, out of which 5,000 you cannot distribute as dividend. So here why they are giving you this particular thing to tell you that this reserve can be used, but can it be used fully? Only 5,000 out of the entire 10,000, 5,000 cannot be used because it is not available for distribution. The meaning is it will be used somewhere else. So I cannot use this as for the purpose of dividend or for the purpose of distribution of profits. So the clue is out of 10,000, 5,000 is not available. Only 5,000 is available. That's all. Investment allowance reserve will come. Okay. That is the meaning. But they have given you a small clue there. Okay. Now read the next part of the question. Securities premium is how much, ma? 2,000. Will you use this? No, madam. Now cash at bank amounted to 98,000. Okay. Now the preference shares are redeemed at a premium of 10%, and for the purpose of redemption, the directors are empowered to make a fresh issue of equity shares at par after utilizing the undistributed reserves and surplus, subject to the condition that a sum of 20,000 shall be retained in the general reserve, which should not be utilized. What is the meaning? Retained in the general reserve means out of the general reserve balance of what it is, 80,000 that is given to me in the question already, I cannot use entirely because 20,000 should be retained. So general reserve I take also. I should remember that they have explicitly given in the question that 20,000 should not be used. So general reserve will become how much? 80,000 minus 20,000 will be 60,000. Next we are talking about P&L account. P&L account 20,000 is there. But can you use the entire 20,000, my dear students? Why, madam? Nothing is given. No. You should take the assumption the preference shares are redeemed at a premium. Correct? So the premium on redemption will be taken from which account? P&L account. So my P&L account total has 20,000. Now I should find out how much is the premium on redemption value. That is nothing but, now come to the question. Let us see how much is the premium on redemption value. It is nothing but I have 1 lakh preference shares given to me in the question, correct? I have 1,000
into 100. So 1 lakh preference shares. On that 10% premium I am repaying. So 1 lakh into 10% gives me 10,000. So out of 20,000, I cannot use the entire 20,000 because 10,000 already I should use for premium on redemption. So, why madam you are telling that reserves and all should not be used? Why are we concentrating on the reserves? Because this question is a combination of your option 1 and option 2. And that also they are telling the directors want to make a fresh issue of the equity shares after utilizing the undistributed profits. Okay? After utilizing the undistributed profits. So, my dear students, please see, we will be doing the working note here. The first thing is, what is the preference share capital that I am going to take? It is 1,000 preference shares into 100. So 1 lakh preference share capital I am taking. Okay. I am taking 1 lakh preference share capital. Okay. Instead of subtracting that 20,000 minus 10,000. Okay. Let me first show you. Minus what are the reserves that are available for me. The first thing is my general reserve. The total balance is 80,000, but can you use the entire balance? At the end of the question, they told retain 20,000 in the business. So let 20,000 be there in the business. Remaining, please use it. So 60,000, I can use it. Point number 1. Now, point number 2. I will take the investment allowance reserve. What is this? Investment allowance reserve. I have a total of 10,000 balance is there. But how much is freely available for the distribution of dividend? Only 5,000. Why? Because 5,000 cannot be distributed. So what I will do? I will take the total value of the reserve and subtract which I cannot distribute as dividend. That is 5,000. So what is the amount that I can use here? That is 5,000 I can use from the investment allowance. The final thing, what is coming into the picture? I have profit and loss account, correct? I have profit and loss account. So, the profit and loss account balance is 20,000. Out of the 20,000, I have to, or for your people easy understanding, shall I tell? So, the preference share capital is 1,000 into 100 over. Plus add the premium here itself. What is the premium that I am talking about? 10% on this. So the total amount I need is 1 lakh and 10,000. What is the amount I need, ma? 1 lakh and 10,000. Clear? Now how am I taking? 60,000 from general reserve, this you understood? 5,000 from the investment allowance reserve, you understood? Now P&L account, take the total balance. That's all. What I was telling you earlier was based on your textbook preparation or presentation. What they did was, out of the 20,000, here they took it as 20,000 minus 10,000, which is the premium on the redemption. Instead of doing like that, just take the premium on redemption and the total value, no. So the total value you need is 1 lakh and 10,000. In that you can subtract the P&L account balance. Either ways you do, you will get the same answer. Okay, either ways you are going to do, you are going to get the same answer. So now it is 85,000 minus 1 lakh 10,000. 25,000 is the balance for which the shares are to be issued at the rate of 10 rupees per share. So what are the number of shares? Divide by 10. 2,500 shares I am going to issue. As simple as that. This is the major portion you people have to understand. Wherein, same like the previous question. Nothing very, it is like the illustration number 4. Wherein we had the face value 5 lakhs minus 3 lakh in the general reserve. No, that was a direct question. Here, not that very direct. It is saying, I have few reserves. But for each reserve, there is a condition. In general reserve, 20,000 I am not going to pay. I'm going to retain. So take only 60. Investment allowance reserve, out of the entire reserve, some portion I should not distribute. So remove that portion, take only what is distributable. And here P&L account also take amount in full. Whenever you have a premium in the question, add it here itself. That also will give you the same answer. Okay, now let us go to the illustration number 8 in the books of the journal entries that I am going to do. Okay, in the books of the journal entries that I am going to do now. What is the first entry I am supposed to do, my dear students? The first entry is creation of CRR, correct? That is nothing but what are the reserves I have used? I have used the general reserve account. I am debiting it. I have used the investment allowance reserve. I am debiting it, and then profit and loss account. So here, why they have done like that is, you should be careful, because if you use the entire profit and loss account here itself, then it will be a problem. So coming back, the profit and loss account, here I have taken 20,000 to show you, no, telling that add the premium here and take it here. If you do this, this answer only will come. There will be no change. But when you come here, you people have to remember, for creation of the capital redemption reserve, I will not be using this entire value. Why, madam? Because 10,000 out of the entire 20,000, 10,000 I should use, or in the last I will pass the entry, no, P&L account debit to premium on the redemption, I will pass that entry, no. So for that I should take away 10,000 and show separately. So how much general reserve I will take? 60,000, this value. How much I will take? This value is 5,000, but here I will not take the entire value because I have premium on redemption which I have to use it at the end. So for that I am subtracting that 10k, only 10,000 I will be taking. So the total capital redemption reserve I will be creating is how much, ma'am? 75,000. Your doubt will be, madam, P&L account balance is 20,000. No, why you are not taking entirely? Because in the question, premium on redemption is there. From where will you take premium on redemption? I told you from the P&L. So if I use full 20,000 here itself, what will happen to my P&L redemption? What will happen to the premium on redemption? So I am setting aside that 10,000 and only taking 10,000. This is for the CRR, being the capital redemption reserve entry created. Now the next one is issue of shares. So all of you please see here, bank account debit to equity share capital. It is issued at par. What is the value? 10 rupees. So 25,000 and 25,000 being 2,500 shares at the rate of rupees 10 each, issued as per board resolution number so and so, dated so and so. So now please see, 75,000 plus 25,000 gives you 1 lakh, which is nothing but the value of the preference share capital. Now after passing these entries, what I should do? Simple, madam. Now pass the entries for the redemption. Entries for the redemption. Shall I pass it this side after rubbing off this? So I will remove this and I am going to pass the entries for redemption. What are the entries for redemption? Simple. How much percentage preference share capital? So the percentage preference share capital is 8% redeemable capital. So I am coming here and passing the entry. It comes to 8% preference share capital account debit. There is premium on redemption. So I am writing premium on redemption account also debit to the preference shareholders account. Okay. So it comes to 1 lakh is the face value. 10,000 is the premium. 1 lakh and 10,000 is this value. So this is the transfer made. When I am making the payment, it will be preference shareholders account debit to the bank will be for the entire value of 1 lakh 10,000 and 1 lakh 10,000. Okay. 1,10,000 and 1,10,000. This is the amount paid to the preference shareholders. And then finally, my dear students, I have to pass or close this entry. The entry I have to pass is profit and loss account, where I have already made this 10,000 profit and loss account debtor to the profit and loss account debtor to the premium on redemption, which is 10,000 and 10,000. That's all. These are the 1, 2, 3, 4, 5 entries that you will be passing along with the working note. As simple as that. You will be passing all these 5 entries along with the working note. So the only difference here was, my dear students, the preference share capital is given to you. The reserves are also given to you, but for each reserve there is a condition. And for the P&L account given here, you people have to keep it in mind that when there is a premium on redemption, that amount cannot be used. It has to be subtracted. So that portion you cannot create the CRR. Okay. In my working notes also, for your understanding, I changed it, or you can show it as per your textbook presentation, which says that general reserve 80,000 minus 20,000, 60,000. And then we have investment allowance reserve 10,000 minus 5,000 is 5,000. And the last one, which is the profit and loss account, I can show there it's a 20,000 minus 10,000, which comes to 10,000. So 60 plus 10 plus 5 is nothing but my 75. This is the CRR. And the remaining portion is 25,000 rupees, which I am issuing 10 rupees face value shares, 2,500 shares each. So I am bringing this. Now when I pass the redemption entry, I know there is a premium on redemption. So I am debiting it and then taking that from the P&L account and closing this value. That's all, as simple as this. So with this, illustration number 8 is also done. Now let us quickly go to the illustration number 5. So illustration number 5 is also a similar way, but there what happens, for computing the particular, this only, okay, the same sum, preference share capital will be given, and then you should find out the number of equity shares, okay. You should find out the number of equity shares. But there is a small change. What happens, they are having certain cash balances. They are also having few investments. So they want to sell the investment, get the cash from that. Their bank balance also, they want to get the amount, use these cash balances, and the remaining, they want to issue the equity shares. Then madam, why in all these questions we have not done that? Here also there is a cash balance of this 98,000, no madam. Then why didn't you do that? It is indirectly understood that it is taken from the cash only. Okay. There, the only difference is why you are supposed to do like that is the undistributed balances will not be given to you. So to find out what undistributed balances are, I should first find out my number of equity shares. Okay. So there I will do the reverse working. When I explain it, it might be a little confusing, but when you do, it will be very, very easy. Now we go ahead with the illustration number 5. All of you, please see here. All of you, please see here. X Limited gives you the following information. You have share capital, reserves and surplus are there. Trade payables comes to 56,500. Property, plant, equipment, non-current investments 18,500. Cash and cash equivalents this much. The share capital of the company consists of 50 each equity shares of 2,25,000 rupees and 100 each preference shares of 65,000 rupees. When they give you the word rupees, don't get confused. Rupees this is the total value of the preference shares. Okay. reserves and surplus comprises of P&L account only. In order to facilitate the redemption, the wordings are very, very important. In order to facilitate the redemption, what is happening? The redemption of preference shares are at a premium of 10%. The company decided to sell the investments for 15,000. That means what? The investments which are costing 18,500 sold for how much, ma? Only 15,000, which means that there is a loss coming in the question. Okay. But now don't worry about that. We will see in the entry when we pass, we will record the loss. Okay. Now come back. Next thing is to finance part of redemption from the company fund subject to leaving a bank balance of 12,000. That means out of the cash balance of 31,000, I am going to hold 12,000. That means 31,000 minus 12,000. That remaining balance I can use for redemption. 12,000 I should have it in my account. The remaining amount I can use it. Okay. Now what is the third part? After using these two cash balances, for the remaining value, I need to issue minimum equity share of rupees 50 each to raise the balance of funds. So they know that the cash balance which is there in the company alone will not be sufficient. So what are they doing? They are doing 2 to 3 things together. So now the first thing you people have to find out here is what are the number of equity shares to be issued, correct? For that, all of you please see the question. It will be illustration number 5. The first thing is, what is the face value of the preference share capital? 65,000 given to you in the balance sheet. So I am taking 65,000. What is the premium on redemption? Yeah, it comes to 10%. I have to take 6,500. So the total cash required will be how much? 71,500. Please remember carefully why I am taking premium here in the question. I am supposed to find out CRR. No. If I have to find out CRR, premium won't come in the question. Correct? My job is to find out how much cash the company has. Sufficient cash is there or not. So they have given me, I am first selling the investments. What price I am selling? What is the cash I am getting out of sale? I am selling the investments, getting 15,000. So that I am taking from the sale of investment. Next, I have bank balance with me. What is that? I have bank balance with me. How much? 31,000. But am I going to take the total 31,000? They are saying, please leave 12,000 in the account. Remaining only please take. So 19,000 I am now taking only because it is given to me in the question. Even though I have the balance of 31,000, I am not supposed to consider 31,000 entirely. 12,000 I should hold. Now this minus this. So out of 71,500, I am subtracting 34,000. So I will be getting 37,500. I need the remaining money. How will I issue this remaining money now? I will be issuing 50 rupees face value of the share, correct? So now equity shares, how much I have to issue? 750 equity shares I am supposed to issue. So how did I get the 750? Very, very simple. I did not do anything. I have just found out what is the amount I need to get by the issue of the equity shares. So to find that out, what I should do first? I should first see what is the total value required. Preference share capital 65,000 face value, but I am also giving them a premium. So the total cash required by the company is 71,500. In that I have sold investments for 15,000 subtract. Again, bank also is already there, but entire value I am not taking. For other expenses, I am holding 12,000 in the bank. Remaining 19,000 I can pay to the preference shareholders. So what is still excess cash that is required by me? This I will raise by the issue of equity shares. What I will do? I will raise by the issue of equity shares. So 37,500 divided by 50, 750 shares I am issuing. Now, shall I pass the entry? Yes. Shall I pass the particular entry? All of you please see on the board. The first entry I am going to pass is the bank. I can take the first entry I will pass is the investment entry because I have sold the investment, correct? How much I have got? I have got bank value from the sale of investment 15,000 to the investment account, okay? But how much is the actual value of the investment? 18,500. Where it is given? It is given in my balance sheet. So the meaning is it is sold at a loss of how much? 3,500. So I am going to the profit and loss account. I am debiting because if I get any loss on the sale of the asset, I should debit the P&L account. This is a normal entry. You don't have to worry. You have already considered this and you are showing it here. That's all. For this entry, I am not going to pass any entry. Bank balance is there. That's all. That is an information. But investment, since I have sold, I have received cash now, I should pass the entry. Clear, everybody? Now, the second entry will be, I am issuing the shares. So, how much shares I am issuing? Bank account to equity. How much is the value I will get? 750 shares into 50. So 37,500 I am issuing now by or being 750 shares at the rate of rupees 50 each issued as per board resolution number dated because you are issuing the equity shares for redeeming the preference shares. You are issuing the equity shares for redeeming the preference shares. Simple. Clear, everybody? Now, madam, you have not passed the CRR entry. So, CRR entry is not there. Huh? No, it will be there. Why it will not be there? How will you calculate the CRR entry? All of you please see. It is nothing but the face value of preference share capital minus face value of equity share capital. What is the face value of preference share capital? 65,000. What is the face value of equity share capital? 37,500. Now, if you subtract, you get 27,500, which is nothing but the CRR. So I am taking profit and loss account debit to the capital redemption reserve 27,500. Madam, why are you doing like this, madam? In earlier questions, we first took the reserves here, no, and then found this out. In this question, they are not talking about the reserves anywhere. The reserves is very silent. They are saying, I have so much cash there with me, but for the remaining cash, issue the equity shares. So we found out how much equity shares are issued. From that information, we are supposed to find out the CRR value. So here it is being CRR made. Being CRR made. Now we will pass entries for preference share capital. So it comes to how much? So the preference share capital account debit 65,000. Then you have premium on redemption of the preference share capital, which is 6,500 to preference shareholders 71,500. Okay. Then we will have bank account debit to preference shareholders. Sorry, I'm writing reverse. Preference shareholders account debit to the bank. 71,500, 71,500. I have enough sufficient bank balance, which is in the form of 15,000 and the next 19,000 and the next 35,700. So I received everything and final entry what I will do? This premium on redemption I have to close it. So it will be profit and loss account debit to the
premium on redemption. It will be 6,500 and 6,500. I am closing it. That's all. This much is with regard to your illustration number 5. The only difference between the illustration 8 and between the illustration 5 is there they have given you the information clearly telling first take the undistributed profits and the next you have to take from the issue of shares. Here also similar one. But what is the difference? Here they are talking about the cash balances. I am selling an asset, getting cash. I already have bank in the books, take that value. Remaining issue the shares. So then CRR will have to be found out. How? Simple formula which I have already told you. It is nothing but the face value of the preference share capital excluding the premium minus face value of the equity share capital. So equity shares face value 37,500, preference share value 65,000. Subtracted, that will be made your part of your, that will be transferred to the CRR. Okay, so with this concept, we have finished. There are two more questions, which is illustration number 9 and illustration number 10, which we will work out in the next class, that is on Monday. Okay, you people can go back and try all these questions once again. Give notes, write in the form of notes and understand. So the basic concept here in the redemption of preference shares is very simple. You can redeem preference shares out of the fresh issue of the equity shares, or you can use your undistributed profits. Profits only available for distribution as dividend should be used. In that case, only general reserve and P&L account shall be used for creation of CRR, and there can be a combination of both. For creating the CRR, the formula is always face value of preference share capital minus face value of equity share capital. And then we have done a stretch of 8 illustrations today. Each of the illustration we understood how are the equity shares computed, what are the entries to be passed, how is the CRR also coming into the picture. So I will take the doubts for the next 10 minutes now. I would request everybody of you, you are getting 2 days holidays now. Please prepare or please make yourself thorough. Practice every particular question that we have done from the first 5 units of the company's company accounts. That is your 11th chapter. So you will understand. So now let me take doubt of Gauri.
Ma'am, what it is fully paid and partly paid shares, ma'am? I'm not understand.
Fully paid and partly paid. So coming back, any preference share capital for that matter, the meaning of fully paid, partly paid is the face value of 10 rupees. Let us consider there is a face value of 10 rupees, okay? Out of which 8 rupees is being called by the company. So the company wanted money and it has called, made first call, second call or your application allotment, everything put together 8 rupees it has already called. But still, out of 10 rupees, it has called full money. Has it called the full money still?
No, ma'am.
Still, how much more is required?
2 rupees.
Correct. So this 2 rupees is the meaning that the share is partly paid. Out of that particular preference share, entire 10 rupees is not received, but only 8 rupees is received. 2 rupees still has to be received. In these type of problems, you should understand that in the case of bonus issue and in the case of preference shares, to redeem, you are supposed to make the shares fully paid up. That means, first you need to get the 2 rupees from them, make it 10 rupees, the value fully called up value, you should convert face value is equal to the called up value or paid up value and then go for redemption. Only if you get full money, you can give them back the full money, no? Apart, if you are getting only partly paid, you cannot actually go back and give them back the entire money. That is the understanding. Okay, Gauri?
Thank you.
Thank you. Others?
Then,
Yeah, tell me. Sorry.
why equity shares not issued at premium, ma'am?
What, ma?
Why equity shares are not issued at premium, ma'am?
Where? Which question you are asking? Why equity
While
shares
you-
not in?
equity shares, while you solving illustrations, ma'am, you told
Okay.
it is normally not issued at premium, ma'am.
It not issued at discount. Equity shares will not be issued at discount because you cannot issue them at discount. You can issue equity shares at discount only if they are sweat equity shares. Otherwise, no discount will come into the question. You can issue equity shares at premium, no problem. But what I told was, even if you issue equity shares at premium, while calculating the number of shares, don't consider the premium. Keep the premium amount aside and compute the number of shares. In the entry alone, you should write securities premium. That is what I told you. Okay?
Thank you, ma'am.
No problem. Kavita?
Hello, hello, ma'am.
Yeah, Kavita.
Ma'am, in illustration 8, premium given from profit and loss or issue of equity share, both have same effect. No, why we are considering profit and loss first to give premium?
This
And
is a good question. See, securities premium also is there in the question, 2000 rupees. Correct? Securities premium also you can use for the premium on redemption. Nobody actually asked me this question because in the section 52, one of the conditions where securities premium account can be used is for taking this particular premium on redemption value only. Okay. But your question textbook may, it has not at all touched upon the securities premium also. It says entirely take the 10,000 from P&L account.
okay.
That is why we have used like that. Otherwise
Okay.
also you can take it. What is the concept you are telling is correct. That is actually 100% correct. But since the textbook presentation is like that, we have also done it in a similar fashion. So from the next time also, if you find a similar question in the exam, please consider first the balance out of P&L only. Okay. And then do the question.
Okay, ma'am. Thank you. Thank you.
Okay, good. Again, Gauri.
Ma'am, I have doubt regarding accounts for bonus issue, ma'am. Illustration number 3.
Illustration number 3. Tell me, what is your doubt?
Ma'am, to issue bonus issue, first we have to paid all the liabilities, ma'am.
It's not like that. I think the last class also, I think you asked this. Debentures are there in the question. Why we have not paid debentures? That one, huh?
Kavita was asked that, ma'am, not me.
Okay. But same doubt, no, you have. Debentures is there. Why are you not repaying debentures, but you are issuing bonuses? Correct? That doubt only? The doubt is, see, for this, it is not required that whatever is existing on the date of bonus issue, you should immediately repay, then only come for bonus issue. That is not the meaning. It should explicitly, the question should say, the company has defaulted in the interest payment. When the question is silent, do you even know whether the company has defaulted or it is paid? You don't know. So in the absence of any information given to you, just because there is a loan that is present in the balance sheet, you need not first repay the loan. Okay? It is understood that the loan still has time for repayment and the interest is also being repaid. Okay? That is the meaning and the question is silent. So you need not think out of the box too much and say company has defaulted on the principal repayment. Why should you take that stand if the question is silent? Correct? No? Let us be positive. Let us understand that the debentures are still having time to get repaid. So the interest is being paid. That's all. We are only concerned about the bonus shares. Why I told you about the 5 conditions should be satisfied when to issue the bonus shares is tomorrow when you go practically for a company and you are handling the bonus issue, you should check these points whether the company has paid or not. That's all. As from your examination point of view for the problems that you're getting right now, this checking you cannot do because you don't know the other half of the information. So you are assuming that they are promptly paying the other things and you are just passing these entries related to the bonus issue. That's all.
Still, I'm not getting, ma'am.
Still you are not getting. Okay. So just understand that whenever there is a question for bonus issue and you are having the loan in the form of debentures or in the form of bank loans or there are any other long-term liabilities, you don't have to do pass any entries for them because you don't know the information fully about them. Okay. The conditions that I gave you was theoretical purpose. It is not for you to use it in the question to pass the redemption entry. You don't have to pass anything. Okay. If bonus shares is coming, your thing is make the bonus shares fully paid up and then use the reserves and then finish your bonus entry. That's all. Okay.
Thank you, ma'am.
If they are telling repay the debentures in the question, if it is given, then only do it. Otherwise, you don't have to assume and do anything in accounts, okay?
Okay, ma'am.
Then Kavita,
Yes, ma'am.
yeah, tell me. Any doubts? Just a minute. Yeah, Kavita, any doubt?
No, ma'am.
No,
Ma'am.
okay. Still your hands are raised. Tell.
Okay.
Hmm.
Ma'am,
Hmm.
when at the time of redemption of equity preference share, we company can issue equity share. Okay, but if authorized capital is beyond authorized capital, can company issue the equity share?
If that is happening, only the board resolution is coming into picture. Why are you thinking we are writing all of this board resolution dated? Wherever you are doing a bonus shares, wherever you are doing an equity shares issue further for paying the preference shares, everything will be done through the resolution only. So you don't have to worry.
Okay, ma'am.
Okay. Yeah. Okay. The others, always we have these both raising hands. The others, you all have understood? Yeah, Akshit. Shoyab, you understood? Niharika, Akshit?
Hello, good afternoon, ma'am.
Good afternoon. Tell me, Akshit.
Ma'am, for journal entries, I was asking bank equity shares redemption illustration 3. I was asking out. It is the question I am asking regarding to illustration 2, ma'am. A
Three,
limited company with subscribed capital. That one you can explain, ma'am. Illustration 2,
of which chapter? I mean, which unit?
11th unit.
No, 11th chapter. Which unit? Unit 1 or 2 or 3 or 4 or 5? We have done 5 units till now. Which unit?
Unit 4.
Unit number 4, illustration
2.
Okay. Just a minute, I'm coming. Illustration, unit number 4, no?
Yes, ma'am.
Just a minute, I need to open that chapter. Illustration number 2.
Yes, ma'am.
In illustration number 2, there is no balance sheet, no?
Journal entries was there, ma'am.
Okay, you want me to explain the journal entries? Okay. Good, you're trying, then you're going back and trying. Very good. There are two things here. In the first entry, a limited company with a subscribed capital of 5 lakhs consisting of 50,000 equity shares of 10 each called up 7.5 per share. So when I told you, if you want to issue bonus, first you should make this fully called up, correct?
Yes, ma'am.
So what is the entry you will pass? For the 2.5 rupees per share into 50,000, it will give you 1,25,000. So what is the entry you will pass, ma? See here, come down. Okay, here they have not passed the bank account to share final call. That is your doubt, right?
Yes, ma'am.
Okay. Yeah, actually you need to pass that bank entry here. Yesterday what we did, no, there should have been a small typo, okay? It is nothing but bank account debit to equity share capital. That should have been the entry here. Okay?
Yes,
Okay,
ma'am.
Akshit, good. That is the thing. That's all your doubt?
And in illustration 3, balance sheet, I have a doubt, ma'am. Balance sheet.
Okay, what is the balance sheet doubt? Come here. What is the balance sheet doubt here? In the answer you're asking? Yesterday, I think I worked this out, no?
Yes,
I mean, the
ma'am. This is
previous
the
class.
authorized capital we are doing. I understood from reserves and surplus doubt is coming. Issued, subscribed, and fully paid up. From that point, I'm asking, ma'am. From
No,
this point, I can't understand.
how did 1,12,500 come? That is what you're not able to understand?
From issued, subscribed, underlined words, no, from that, I can't understand, ma'am.
That is okay. I will tell you. See, all of you, go to this particular thing. See, already you have issued and subscribed paid up. So this I am writing it separately. You have not done any bonus issue for the preference shares, correct? So 8,000 shares will remain as 8,000 only. But when you come to equity shares, what has happened? 90,000 was there existing. Now, how many shares you have issued? One for every 4 shares held, correct? So how many shares you have issued additionally? Come to the working notes, come below. So you have issued additionally on 90,000 divided by 4 into 1 gives you 22,500. That is what they have done here. They have taken here and they have just returned 90,000 plus 22,500 gives you 1,12,500. It is nothing but this. Did you understand? There is no change. Whatever is there earlier, I have taken 8,000 preference shares. Equity shares alone, there is a change. That too, what is the change? 90,000 was earlier shares plus 22,500 you have issued the bonus shares. Why, madam, I am considering, or how, madam, 22,500 is coming means simple. We have found that out, no? See here, 90,000 by 4 gives me 22,500 that I have issued here. Okay. So now my share capital increases. My equity share capital earlier was 9 lakh. Now it became 1 lakh, 11 lakh and 25. Now what is the problem with reserves and surplus? Simple, no? I need how much? The value of 2 lakh and 25,000. I have taken from 20,000 from the securities premium. So that has become 0. General reserve also I have used fully. That has also become 0. And from my profit and loss account only 45,000 I have used. Go and look into your entries. If you look into your entries, the same values will be there. Whatever you have used, you should subtract it. So the remaining will be revaluation reserve. I will not use 35. And the balance in the P&L account is 1 lakh and 60. So the total value comes to 1 lakh and 95. So the reserves value is 1 lakh 95. And this value share capital including the preference and equity share comes to 12 lakh and 5,000. Then the long-term borrowings, I am not doing anything because I am not supposed to do anything. That is what even Kavita asked. That is what even Gauri asked. 5 lakhs will remain as 5 lakhs only. You don't have to pass any entries. You are just bothered about how the equity shares are increasing, how my reserves and express to that extent it is decreasing. That's all. Okay.
Ma'am, doubt long-term borrowings, sometimes we are not using, so how we can identify we should use or not? Long-term
We will
borrowings in
see.
added.
You are not using long-term borrowings anytime. May it be for accounting for bonus issue also. Even in the chapter now I was discussing about redemption of preferentials also, you are not using it anywhere. You need not pass any entry also. Why, madam, you passed an entry here in that illustration number 7? Because they told the company has issued, that's all. They have not told anywhere it is to be used. If it is to be used, the wording is given only, you have to bother. And by default in these two, they will not use the debentures at all. Okay?
For notes to accounts, if suppose they given 12% debentures, that time we have to write in notes to accounts, no, ma'am.
Correct.
So I was asking, suppose this is the balance sheet given for debentures or shares? Debentures, no, ma'am.
Balance sheet is given for all the instruments together. It is for the company. So the company can have equity shares, the company can have preference shares, the company can have debentures also. Okay? So it is not required that the balance sheet is only for debentures, only for no. The company has a balance sheet which has debentures. Did you do anything with the debentures? No. So in the closing balance sheet, in my answer also, I will just mention debentures still there 5 lakhs. That's all. Okay? You are not supposed to do anything with the debentures. Yes?
Ma'am, when is our webinar for company accounts?
When is our?
Webinar for company accounts.
Which webinar?
5 to 7. Yes,
I am
ma'am.
not sure. You should ask I should think you should ask Priya. She will give you that thing. So you don't have to worry. Okay?
Link will be available in which app, both
Yeah,
portal
they
or
will send it to you. They will send it to you in the mail. Okay? Okay, Akshit. Thank you. The others? I think done for today. Yeah? Everybody else? So you don't have to worry when the question is not specifying anything to you. Debentures, you need not do anything. Only under issue of debentures, when you are handling that, the debentures have to be done. Bonus issue, rights issue and redemption of preference shares, you need not do anything with the debentures. Okay? On that particular note, today's class we will be ending and we'll come back on Monday. Keep practicing, keep asking doubts. We will take up all your doubts. And your webcast and everything, the link will be shared shortly to you. Okay, so you don't have to worry, everything will come to you, all the information you will be receiving. Don't worry, keep practicing more. Okay, thank you.